Let's jump into it today because this is going to be a good one. Let's talk about the clarity issue and what that means for the crypto markets. We'll also be talking a little bit about where tariffs are heading. We'll also get into World Liberty Fi and their recent conference. There's a lot happening, so stick around for all of it. I do, of course, want to just start off quickly with this CoinDesk article, which I thought was interesting. This, of course, is the additional White House meeting that is talking about stablecoin yields. And this is the issue, as we all know, for clarity getting through. The banks are holding on to get into those yields and be able to refrain the rest of the industry from actually paying them. This, of course, I think, led to something very interesting. I'll jump over to the next tweet, and that was a spike right here on the odds of being passed. Clarity Act spiked up to over 90%. And when you look at this, it retraced immediately right back down. So very intriguing. I don't know if there is some insiders in DC. This gets into the whole polyarchate and prediction market issue of people having information. Is that truly insider information? I think we are on the cusp, guys, of getting a Clarity Act through. So be on the lookout. We're going to be covering this very closely as things get heated up in DC to get going. Right here, we've got a poll that I think is interesting. We'll see where it lands. I'm going to vote this way. And that is, when you look at the Clarity Act, will it mark the bottom for crypto? Let me think, guys. I'm going to say no. Everybody is on the yes side. Oh, I definitely am right on this one. So, we'll see how that plays out. If you believe that, let me know in the comments down below. If you think this marks if Clarity go through marks the bottom, just put bottom is in with Clarity. I'd love to see that. I want to go to a clip real quick because this clip right here will get into maybe another thing that could mark the bottom for the market, and that's NVIDIA. Take a look. So you say there are three key trades: rotation back to the Mag 7, the IGV bottoms, that's software, and crypto bottoms. But you're not suggesting that those three items have happened, are you? Not yet, but we're maybe 90% of the way through that, because I've seen some of the positioning data. So we know on the for instance, Prime Brokerage, Goldman Data Software. Ownership is like multi-dead lows. And then we know that the Mag 7 have gotten cheaper than the bullet makers, which has never happened in 10 years. The 3 PE points discount. And then, of course, on the crypto side, we've already gotten to drawdowns that are basically 80% of what's been in past crypto winter. So I think those are setting up to be really big trades. Maybe they've led the market, so we have a they bottom first, and they'll start to rally. Even if the market's peaking, does NVIDIA earnings 1 week from today hold the key? And we need to get the results. We need to hear from Jensen Huang. I mean, that could set the bottom because, if you look at the software index, this is like the 8th week of a pretty severe downturn. So next week, as you know, sometimes 9 is a big number. Turning point that could mark the bottom. All right, so there you have it. I'm looking at the NVIDIA chart right now as it goes a little bit sideways from that top right there around 208, holding as we record this at 186. And I think Tom Lee might be right on this, is that NVIDIA very interestingly has been going somewhat sideways. Look at the trend up. That was the trend up that we had seen. And then this is the action that really we have seen since about October of last year. So playing this could be the factor. Now, granted, I was intrigued with his idea of rotation back into the Mag 7. That would be a big move forward. And I think also you look at other opportunities near the bottom, which is where I think we are right now. ETH is going to be centered around that. He put in a little bit of data right here, which I think is interesting. Some useful research by Fundstrat and Sean McFarrell, and they're talking about ETH and the realized prices. If you look at the chart right here, because it's nearing the capitulation levels of realized price, meaning this is where the best price for Ethereum could be, we are near it right now. And if we get into that $1,900 range, I think that might be a very good spot. Now, could we retrace back down to $1,500, $1,600 if we see a major impact on the market? Sure, those kind of things can happen. But if you look at fear and greed, just in general, we are plummeting again down to an 11. And of course, right now, this is a factor that I think will continue to play as long as clarity is looming. Not only clarity, you've got a whole issue now brewing in the Middle East with Iran. You also have the continuation of affordability that's facing Americans all over the place. And then you have this right here, and that is searches for Bitcoin going to zero. Well, they have now allocated more than they did in 2022. They have spiked up. So, what is going on with the Bitcoin crowd? Have we seen the OGs exit? And now we're starting to see a whole new crop of Bitcoin people coming in. And they're looking at this asset completely different. That is the big question. Other things that you have to consider right now, on the big macro side of course, is right here, and that is the US-UK conflict that could be brewing. The big problem there right now, of course, is Starmer is saying, hey, you're not going to put any, war plannings in the British RAF bases, especially if you're going to use those for strikes on Iran. This is basically one of our supposed allies pushing back on any kind of aggression toward Iran. Interestingly enough, we know what's going on in Iran right now. The other thing you have to consider right now is what's going on with tariffs. Here was President Trump saying that the U.S. will have its first trade surplus in decades. He's cutting it by 78%. Grok fact-checks this and said, no, it's around the 9 to 35% in 2025. I don't know where they're pulling this data from. This will probably continue to be a contentious point. I think especially as we see midterms coming in, because I think the administration is going to continue to push that we've saved a lot of American jobs and all of that. One other point I want to hit on is right here the New York Fed study that showed 94% of tariffs or increases are paid by U.S. consumers. This is a problem, and companies, of course. But the consumers, in most cases, get the big brunt of this. And I think a lot of people still push back on tariffs. I think this has definitely caused pricing to increase. Consumers and companies are paying it. It's without a doubt. Now, there has been some pushback from the administration. Kevin Hasid had something to say about this. Take a look at this clip. The paper is an embarrassment. It's, I think, the worst paper I've ever seen in the history of the Federal Reserve System. What they've done is they've put out a conclusion which has created a lot of news that's highly partisan, based on analysis that wouldn't be accepted in a first-semester econ class. His claims are simply wrong. There are 7 papers that came to a similar conclusion. KE Institute says 96% paid by domestic entities. Yale Budget Lab, 96. An NBER paper said 94%. Goldman Sachs said 88%. Take into account how tariffs change import volumes. They did find the share borne by exporters increased slightly over time, which is good news as importers rearrange some supply lines. When it happened yesterday, I thought, is just more loose talk and bluster that we get from not just the president. A lot of people want companies to pay more, and it's raised so much in tariff revenue that some of the big, beautiful bill deficits are actually being cut a little bit by some of the tariff revenue. So why not like it? These guys can be wrong. They can be dead wrong. But does that mean they should be disciplined then? Is it an embarrassment? Lose talk in, that was shooting the messenger. That was shooting the messenger. And I glossed right out. I'm glad we are in the same place on this, Joe. All right, so I don't think they ever agree on it, Joe, and the guys there at CNBC. But the point he's getting at is that this was a lot deeper in terms of the research that was being done. You look further into what's going on around jobs because this is the concern right now. If you look at a recovery in markets, you need two things. You need stability on pricing, which has not been able to be maintained, and you need jobs coming back. Well, right now, Trump's first year in office is the worst job growth that we've seen this decade. That's including, of course, excluding CO. This is the problem that I have talked about here countless times on the show, is that jobs are a concern of mine. Now, we have seen a little bit of lightening of the job pressure, but only this year only. And here we are just now in February, going into March. Could we see a little bit more lightening? Maybe that changes the outlook here, which will help, I think, in general. But right now, the pressure is on, for sure. Other news I want to get into is what's happening over at the World Liberty Finance Conference. And of course, they announced a lot of new stuff. One, of course, was the RWAs that they are talking about. They're officially partnering with Securitize and Dark Global. And this is going to bring institutional-grade RWA offerings out to the public. This was an interesting result, because the first asset on the list is the hotels of Trump's family in the Maldives. And here's what happens within this next post gets into it. It hits it dead on. First of all, they're turning future hotel revenue into a tradable token. So the pitch is pretty simple. You unlock liquidity from Trump International Hotel Project. This, of course, backed by Securitize. And this, I'm getting into the point where I see there's so much of this, I don't want to say craziness going on. But it just reminds me a lot of some previous runs that we've seen in crypto. And the catch, the asset isn't live. No operating cash flow. Completion slated for 2028. That's a problem. And yet the token go live in 30 days. Tradable from day one. Yeah, I think he's right on. This concept is bold. The risk is definitely obvious. Yes, guys, I would not suggesting going into any of these at all. But you know what? Let's listen to what Eric and Don had to say about it. Take a look. Well, you know what the critics would say? They'd say that the credibility factor is the Trump name and the Trump White House, and that everyone, is here to curry favor. I think the great honor here is they didn't give us much of a choice. They created this monster. But when you had every big bank in the world they left us no choice. They created this monster. What they should have said was, oh, Sarah Eisen is the CNBC host. Sarah, I don't know what you're talking about. I mean, no. Here's why we have so much credibility in this industry. This has nothing to do with our father. Here are the firewalls. Here are the layers of protection, the layers of ethical guidance that we go to. Totally separate ourselves from our father. This has nothing to do. Here's where our father has taken actions in the White House, which has actually been to our detriment. Here's why this is not a conflict of interest. Here's why this is not corrupt. Instead, what they say is, we had no choice. They gave us no choice. They created this monster. It's actually people who criticize Donald Trump who made us cash in on the Trump presidency. Well, you know, guys, I know many of you are big Trump fans, some of you are not. And whether you like it, you don't like it, the real question is, what's happening right now? I think is very questionable. I think in general, if we're going to see this go forward, now granted, there are many financial organizations have done similar things, in terms of very advanced risk assets like this. I think that is going to continue to be a factor here. The fact that he said that on air of, you know, they created this monster, even surprised me, for sure. Other things you got to look at, of course, is what Critical BTC was talking about. And this is the U.S. economy now reliant on older Americans. So 55 plus now represent 45% of consumer spending. This is the boomers. This is where most of the cash is. But in reality, I've done some research on this. This is actually more globally aware, is that this is where the capital is going. And this is nearly double since the early 2000s. But the reason is because we have not seen a major shift in wealth out of the boomer class and into the millennials. The Gen X, my generation, we weren't large enough to make a dent, you know, in the global wealth trap that seems to be out there. But if you look at the comparison right now, the gap between the two groups has narrowed by 35 percentage points over the last 25, but it is on track to converge for the first time. So it is getting to the point where we could see a very intriguing shift of wealth coming forward. One last thing I want to hit on, of course, is this right here. Big warning for the first major domino that has fallen. And that is that we're starting to see now a $1.7 billion private credit fund that's aimed at retail investors has now gone into trouble. And I think this may be a little bit of PTSD coming in from what we saw during the 2021 run and that bull market. And of course, the many of the things that were fallout issues into the markets, including bank runs, issues with bank failures. The problem with what we're going to see here now in private credit. This all boils down to overheated markets, leverage that is now starting to pay the price, and this is where we are right now. Let me know what you guys think in the comments. Of course, we'll get into more of this. I anticipate we're about to see something big, though, with clarity. Stay tuned. If you like this video, hit like and subscribe. Drop a comment down below.